Hi everyone, welcome back to Areca channel, and I'm Areca from Vietnam, and today I will share with you about one stock in Vietnam stock market. If you want or if you are interested in Vietnam stock market, please contact to my email hong.alice@gmail.com. And today I will share a new report about logistic service in Vietnam. Here we go. This is the new update from Viet Capital Securities, where I work, and here we go. You can see on the screen. This is the short, the summarize of Saigon Cargo Service SCS. The current price is 118,000 Vietnam dong, mean around the $5. PE, earning per share, EPS no error. You can see the EPS year in 2019 is 14% per year. Okay. Company overview. Saigon Cargo Service SCS is an air cargo terminal operation located in Tân Sơn Nhất International Airport, SGN. As of 2019, the company held a 35% market share of international cargo throughput at SGN Airport. SCS also leases airport apron, offices and soccer fields, all located in the same plot of land. Solid long-term player facing short-term headwinds. We reiterate our buy rating for SCS, but cut our target price by 8% to 171.6 thousand dong per share, as we revise down our 2020 forward or 2021 and 2022 net profit after tax (MI) forecast by 7%, 3.8%, 4.3%. This downward revision mainly reflects the negative. The negative impact from the coronavirus outbreak in China. We forecast a 2020 revenue growth of 5.9 year-over-year to 792 billion Vietnam dong, as 34 million US dollar, and net profit after tax (MI) growth of 7.6% year-over-year to 541 billion Vietnam dong, as 23 million US dollar, mainly driven by 2.1% international cargo volume year-over-year growth and year-over-year NPM expansion of 1.1 ppt. We assume lower top-line year-over-year growth in 2020 due to the expected major runway maintenance at SCS and impact from the coronavirus outbreak. We believe international cargo volume growth will surge to 17% year-over-year in 2021 from a low base, thanks to continued strong demand for international cargo at SCS and positive momentum from the EVFTA, which is expected to be effective in H2 2020. We remain bullish on SCS outlook as we forecast a top line 2019 to 2024 CAGR of 16%, along with a strong NPM of 67% to 75% and return on equity of 51 to 56%, which should be driven by the first healthy air cargo volume growth in Ho Chi Minh City that is in line with robust manufacturing and consumption growth. 2. SCS sustainable duopoly. Sorry. The second, SCS's sustainable duopoly market position is at SAGN, and the 3, the company's 19% cash conversion ratio due to low capex needs of $8 million over 2020 to 2024, along with no debt. SCS is trading at an attractive valuation at the estimate 2019 to 2022 forward PEG of 0.7 downside risks to our positive view: lower trade flows, airport capacity constraints at SGN. Coronavirus outbreak hits SCS international cargo volume growth. Given the concern regarding coronavirus, Vietnam has suspended all the flights from to China since February 1st, 2020, in Hong Kong and Ho Chi Minh. In addition, Cathay Pacific, one of SCS major airline clients, will lower its number of flights between Hong Kong and Ho Chi Minh City by 1/3 due to lower air travel demand. Per management cargo volume from to China and Hong Kong contributed 7% and 15% respectively to SCS total cargo volume in 2019. We are therefore lower our international cargo volume growth assumption to 2.1% year-over-year in 2020 from our previous assumption of 7.6% year-over-year. Our base case scenario is that international cargo flow will be normalized from Q2 2020 onwards. Given the uncertain progress of the outbreak, we include a sensitively analysis on our international cargo volume growth assumption. Baseline 6. Volume growth will be further distorted by runway maintenance at SGN, which we believe will occur in 2020 and cause a slight air traffic disruption for 4-month period. Under a scenario of no runway maintenance, we assume international cargo volume growth of 4.9% year-over-year in 2020. Solid outlook remains intact. New project expected kick off in 2020. For 2021 to 2022, we expect international cargo volume growth will bounce back after a short-term deceleration to reach 17% in 2021 and 15% in 2022, which is driven by robust manufacturing activity and consumption growth in Ho Chi Minh City and surrounding provinces. Moreover, a second office building is expected to start construction in June 2020. Per management, which could generate earnings upside and in additional cash flow for SCS over the long term. We note that we have not incorporated this project into our valuation and forecast due to limited detail at this time. You can see the figure 1, SCS unaudited 2019 results. Earnings broadly in line with our expectation. We estimate ASP was up 4.1% year-over-year in 2019, which reaffirms our view on SCS solid pricing power while international cargo volume growth remained weak at 6.5% year-over-year in 2019 compared to 8.5% year-over-year in 2018. Yeah, you can see the board. Continued SG&A expenses margin was down to 9.1% in 2019 from 9.9% in 2018, which was lower than our previous assumption of 9.5%. The labor costs accounted for 39% of total SG&A expenses in 2019, which were down 11% year-over-year. This decline was because bonuses from employees have been appropriated from BNWF starting from 2019. Per management, the BOD fund and BNWF allocation are expected to remain unchanged at 7% in 2019. Preferred dividend of 30 billion Vietnam dong as $1.3 million in 2018 and 35 billion Vietnam dong as $1.5 million in 2019. Adjusted net profit after tax (MI). Outlook: challenging year ahead. VCSC 2020 forecast for SCS. VCSC comment: per management, international cargo volume. Per management cargo volume from to China and Hong Kong contributed 7% and 15% to SCS's total cargo volume in 2019, respectively. Due to the coronavirus outbreak in China, we lower our international cargo volume growth assumption to 2.1% year-over-year in 2020 from our previous assumption of 7.6% year-over-year. Our base case scenario is that international cargo flow will be normalized from Q2 2020 onwards. Additionally, we expect major runway maintenance at SGN will occur in H2 2019, which is slightly disrupt air traffic for a 4-month period. Under scenario of no runway maintenance, we assume international cargo volume will growth of 4.9% year-over-year in 2020. Domestic cargo volume, we raise our domestic cargo volume growth assumption to 4.6% year-over-year in 2020. Compare our previous consumption of 0.4% year-over-year as Bamboo Airways ramps up its activities in the domestic market. Additionally, BA Bamboo Airways has been SCS client since May 2019, making H1 2019 domestic cargo a low base. However, we note that domestic cargo only contributes around 5% to SCS total revenue in 2019. Estimate ASP Viet Nam Dong per kilogram. As a result, a slower growth in international cargo volume will lower our ASP assumption by 2.9%. Valuation. We value SCS using DFC valuation method. We note that we have not incorporated SCS anticipated a second office building development due to limited detail at this time. However, we see potential upside to our valuation if the project receives final approval, as we believe the demand for office rental near SGN is high, along with the fact that SCS does not have to pay for additional land clearance or land lease payments. Valuation summarized. Upside target price is too high, 45.4%. Dividend yield 6.4%. So total ups is profit is 51.8%. Figure for DCF valuation: beta 1, market risk premium, risk-free rate, cost equity, cost debt, equity, corporate tax rate. PV free cash flows, PV FCF and TV, equity value, share value per share. Figure 5, cash flow summarize. Figure 6, SCS selected peers. Some company in the world assort Bloomberg. For example, Atlas Airworld, Xiaoman International Air, China, Macro Asia, Philippines. Medium average. We can see the difference between Saigon Cargo Service. The return on equity is too high, outstanding compared to some company in the world, from United States, China, Philippines, Indonesia. So Saigon Cargo Service is a really good performance in return on equity. The same to return on assets, really good performance. Sensitive analysis, all else being equal to our target price on SCS could be broadly maintained under all scenarios, as we assume coronavirus and runway maintenance at SGN could only impact SCS 2020 results, as international cargo volume contributes around 95% to SCS air cargo terminal revenue. We only include a sensitively analysis on our assumption of international cargo volume growth to show the impact on our earnings forecast and valuation. We believe coronavirus outbreak and runway maintenance could also affect domestic cargo volume growth, but we expect the impact on our earnings forecast and valuation to be minimal. Coronavirus outbreak. As cargo volume from to China and Hong Kong contributed a respective 7% and 15% to SCS total cargo volume in 2019. The coronavirus outbreak in China will have a negative impact on SCS volume outlook in 2020. Under our base case scenario, the outbreak could peak by the end of Q1 2020. As a result, international cargo volume would be substantially normalized in Q2 2020. We currently assume the outbreak and decrease SCS international cargo volume by 10% year-over-year in February-March 2020. Furthermore, we assume the impact of coronavirus on SCS full-year international cargo volume to be around 3% year-over-year. Our base case assumptions are based on the following. 1. As Hong Kong is an international air cargo transit hub, cargo from to Hong Kong depends on manufacturing activities and consumption in other regions, including the Euro and US, rather than only China. Given lower air travel demand, airlines might use cargo aircraft to meet the high air cargo demand instead of using passenger aircraft. 3. Other markets, such as the Euro and US, still posting solid air cargo demand during the coronavirus outbreak. In our blue skies scenario, we expect the outbreak to affect SCS international cargo volume until to the end of February 2020. In our gray sky scare scenario, we assume it could be till the end of Q2 2020. Runway maintenance. Assuming that maintenance takes place in 2020, we believe SCS international cargo volume growth could remain broadly flat year-over-year under our base case scenario during the 4-month maintenance period. In the worst case scenario, we believe SCS international cargo volume growth could be declined 50% year-over-year during the maintenance period. To date, there has been no further update on the timing runway maintenance at SGN and nearby an international airport AN. However, we believe runway maintenance will likely happen in 2020 as the Ministry of Transport (MOT) has stated these runway need urgent major repairs to ensure flight safety and avoid unexpected closures. Our base case scenario assumes SCS cargo volume to remain broadly flat year-over-year in the 4-month maintenance periods. 1. The two parallel runway at SGN do not have enough distance between them to independent run, implying that only aircraft is allowed to take off or land at a time on the runways in the period that major maintenance. We believe no runway at the time will be temporarily shut down. Therefore, air traffic will not be considerable affected in comparison to normal operation. 2. Flight schedules will be allocated to off-peak times, late at night or early morning. 3. High-yielding international flights will be prioritized compared to domestic flights. And 4. As SGN expects to reduce flight turnaround times in order to increase runway utilization. Figure 7. Effects of coronavirus and runway maintenance on SCS 2020 international cargo volume year-over-year growth. Figure 8. Effect of international cargo volume growth on earning forecast and target price. Blue sky, base skies, gray sky, blue sky, base sky, gray sky. We can see on the screen WACC and terminal growth rate. Figure 9. Sensitivity analysis of our target price Vietnam Dong for SCS in relation to DCF's WACC and terminal growth rate, ceteris paribus. recommendation history. And this is the financial statements. Thank you. And this is the end of the report. And so one more time, I am very pleased to be your brokerage. I will support you if you want to open a legal account, trading account in Vietnam stock market. I will support you. And now Areca live in Hanoi, and our office in Hanoi, capital of Vietnam. So I hope to see you in the future. Hope to see you soon. Thank you.